We had, we had quite a strong move off the lows today. That definitely got some people thinking, oh, maybe there's some bullish side to this, and we're not going to experience some downside. We haven't really pushed downside levels too hard. This is nothing crazy. And I say, wait a minute, let's stick with the fundamentals. And let's look at what actually happened today and what caused such a strong performance in the NASDAQ. Apple had a very strong day. It very early broke into the green and kept pushing. I'm not convinced Apple is in a good position right now. They make great products. I get it. They're Apple. I get it. They have a history of beating expectations and coming back from behind and proving the haters wrong. And I don't want to be a hater, but I want to look at things objectively and go off what we do know and the news we have gotten, and it's all negative in terms of Apple. Couple things. We're just going to run through them, and you can make the decision for yourself whether or not you're optimistic on Apple and whether or not you want to see a green day today. I don't want to see a green day today from Apple. I don't want to see a green day today from the market. I don't think it has digested fully the CPI yesterday yet. Apple has told us, or has leaked, that App Store earnings weren't as good. Okay, well, that was basically the entire reason for the multiple expansion, all these subscription services, these additional products people were buying, and Apple is trading well above historical multiples. That's one thing, but maybe we can look past that, little bit of a slowdown. As long as the rest of Apple's business remains strong, it's still going to be Apple at the end of the day. Well, I'm not convinced Apple is going to remain strong. The rest of Apple is going to remain strong. The reason for that is, I heard on CNBC the other day, pre-owned product prices are down. That might be a good thing because that means the consumer is strong and people are buying new products. Well, the consumer's been strong in the past, and Apple is historically known, their products are historically known for having good resale values. This is a thing. I've sold many phones. You can sell Apple products historically for good prices. However, not only are we seeing a pullback in Apple pre-sale prices, or pre-owned prices, we are hearing from consumer reports that consumers are readily pulling back spend on consumer electronics goods. So we're seeing Apple pre-owned prices come down. We're seeing reports that consumers are pulling back on consumer electronics. We had a massive boom of consumer electronic spend. People have bought plenty of consumer electronics. They bought their computers, they bought their brand new iPhones, and now pre-owned prices are going down. I think it's safe to assume this is not going to be a red hot quarter for Apple. I think it's safe to assume that we shouldn't expect this to be a tremendously strong quarter for Apple. We shouldn't go in with that frame of mind. And the stock performing phenomenally today, in my opinion, is not very strong. So I'm not optimistic about MegaCap tech earnings. And I think Apple is single-handedly the reason the market had the recovery it did today. Apple went green very quickly, very early, right after the bottom. Everyone's looking at Apple. Apple's, the biggest stock. When people see Apple green, they're comfortable buying. But we didn't push any upside levels. We didn't break really any trends. Yeah, you can make kind of a case on the weak QQQ chart that something's happening there. I have no idea. We didn't break the highs of yesterday. So I think we still have to digest some of this stuff. What's up, Zach? Feel free to ask questions in the chat if you have any. I'm here live. Anyways, I'm not convinced that I'm super optimistic about Apple. I'm not super optimistic about what happened today. I'm still hedging aggressively for the downside. TSM came okay with earnings. I'll take a deeper look at that. I'm not a big chip guy, but hey, maybe we can. I wish I had a computer right in front of me so I could pull that up while I'm here talking. If I could even have a stock chart, maybe the evolution of the videos. So I guess the chips, the semis are doing pretty well, according to Zach, which I trust. So we'll see what happens with that. Maybe I'm wrong. Maybe Apple does surprise with earnings. I mean, if the chip players are, that's a pretty good indication that consumer electronics are doing actually better. We'll see what happens with the semis. I don't have any. We'll see what happens. Not saying that for any sort of investment thesis. I'm just saying I don't have any. But I think the Apple case is still my position. We'll see. Maybe the market knows something I don't. Apple had a very strong day today because they're going to have strong earnings like the semis did. And we'll see what happens. But I'm still somewhat pessimistic. Now, to reiterate this point, we saw a divergence between the QQQs, which have Apple, and ARK, which has essentially non-MegaCap tech players in it. ARK was down today. The NASDAQ spent a lot of time up. Apple was quite meaningfully up. Maybe that's because Apple's going to have good earnings, the semis have good earnings, the bigger companies that actually produce profits are going to have good earnings. I'm not so convinced. We're going to see what happens. And, 2 weeks ago, I was rather bullish, and I still have my long positions, a good amount of them. I have taken some off, I've trimmed some exposure, but I'm also definitely adding downside protection right now because rates, 10 years still below 3%. I don't think the 10-year belongs below 3%. Okay, Fed might not do a 100 basis point hike. That's fine. But the peak inflation that people were hoping happened a month earlier was just pushed out a month. The Fed needs to see consecutive months of inflation coming down. So at least until September, they're going to be in foot on the brakes mode. So we get 75 the next. We'll assume, maybe there's 100. We'll see. We're getting retail sales tomorrow. If those are hot, they're probably going to do 100, but we're going to have to see. That gets us to 2.5. Okay? They do one more 75 in September. That's 3.25. The 10-year is below 3%. Even if they do 50 in September instead of 75, that means the 10-year is going to be at 3% minimum because that's where Fed funds is going to be. They have inverted. The 10-year has been below the Fed funds rate. It hasn't done that yet this year. I don't think it will. Seems like we're at quite a high level of fear and it's not happening right now. You could say the Fed funds is lagging, et cetera, et cetera, et cetera. I don't think there's going to be an inversion. Even if there is, it's typically not a widespread. So, what do you think the market's going to do when the Fed, when interest rates push up? I mean, we know what happens. This happens every time. Stocks come down, particularly tech stocks. We'll see what happens. There's always exceptions to these rules. Things can always happen. The market can calm down, can say, hey, 20, 50 basis points in the 10-year. We're past that. We were concerned about 4%. We're not getting there. We'll see what happens. Things I'm worried about. Additionally, Bank of America was a bank saying consumer strong, consumer strong, consumer strong. And maybe the CEO is still going to say that. Jamie Dimon seems to be saying consumer strong still. And maybe that's going to be the case. Maybe the recession fears are overblown. But when Bank of America drops its S&P 500 forecast as significantly as they did and projects downside down to roughly 3,000, you can't ignore that, in my opinion. I think we have to prepare and hedge for that because that is a meaningful shift. They're seeing something. Okay, they're seeing something. This is not our previous forecast was 4,500. We're well below 4,000. We still think the S&P is going to see gains the rest of the year, but we just have to be realistic based on where we're at and how much time is left in the year. That's not what they said. They said, this is our year-end target, 3,600, which is lower than we are now. But between now and then, we think we can go meaningfully lower. I haven't read the full report. I don't know exactly what the reasoning is, but I know what they were saying before. They had I believe, 4,500 S&P 500 target. The CEO has repeatedly said, no signs of a consumer slowdown, not forecasting recession. Yesterday we had CPI. Today, massive change in S&P 500 forecast. We'll see what happens. We're taking things one step at a time. Earnings are going to start trickling in. Yes, we have some semiconductor stuff. We'll see what happens. Semi's definitely a good thing to see in terms of economic strength, broad-based product. We'll see what happens. That's today's video, and until next time, peace out.